Hey guys, what's up? Welcome back for another episode of my weekly market analysis. Hope you guys are having a great week this week. So, yeah, I said week way too many times in that sentence. Whatever. Let's move on. So we got 3 different trades that we have going on that are live right now, and we have a couple other trades that we took a couple days ago, and, 2 of them were today. One of them was 2 days ago, and these trades were already losers. I wanted to go over them really quick and just describe why I took them anyways. So, the first was pound CAD on the hourly chart. I mean, we're always trading on the hourly chart. And as you can see, even before I hit the play button here, it was already an unprofitable trade. So why did I bother posting it? Well, I'm trying to be as transparent and as honest as I can. In fact, even I told you in the description here below that I took the trade around this, I was watching it around this blue line. This blue line usually marks where I found it and then what it did afterwards. So by the time I found it, I did my Fibonacci retracement tool, and then I basically put a hypothetical entry that would be the yellow line, and I went ahead and took the trade. When the entry got hit, I went ahead and also placed a stop loss up here ahead of time, just so that you never really want to enter into a trade and not have a stop loss. So I would, if I ever did this in real life, which I totally plan on once I'm done backtesting this strategy, basically what I would do is I would place an entry order, a limit order, and then I'd place a stop loss order right above that limit order. The stop loss order isn't going to get me involved until I'm already entered. At least, and in theory, that's how it would work. I don't know exactly how I would do that via the broker and the actual ordering system that they have, but I'm sure that they have a way to automate it in that sense. So, but this was what that was already a loss. The EURCAD here, I took this today, 2 hours ago. Again, as you can see, even before you hit the play button on the far right, if you hit the play button here, this is what it shows you happened. But we had already hit a loss right here. So again, I just wanted to post this to you guys because these are 3 different patterns that this happened on, where I did the analysis a couple days ago. Now, the EURCAD and the pound New Zealand, I didn't actually mark those with blue lines. That's because I actually found those today. And I went ahead and I placed my trade, or either I found them today or I think one of them I found yesterday. And I placed my entry over to this, I think one of these, I think this one, since it's an hour ago, I actually think this one I went ahead and took the trade and actually placed the line there and just waited to see what would happen. And while I was checking on the rest of the currency pair, the rest of my portfolio, it went ahead and it rallied and stopped me out, or something around those lines. So that's kind of what happened. Unfortunately, I can't really see, did I make any mistakes here? It's probably a pretty good question to ask. See, this one right here, we didn't really, okay, I don't really feel like we honestly made a lower low, lower close. We did obviously make a lower low, or we did close below this structure area right here, but because of this big wick, we made a new lower low. I wouldn't necessarily say that we made a new lower close, a lower low, lower close. I don't really consider it to be a new lower low, lower close unless the candlestick body is beyond the wick. So like this one, this candlestick body right here is definitely beyond these wicks right here. So this would be a new lower low, lower close. Because of this one right here, this is, we didn't really get anything that closed below this, and this one itself did not close below. Well, it did, but it didn't really close below these wicks. So I don't know. Maybe I'm weird like that, but that's kind of how I view it. So I would say maybe I shouldn't have taken this trade at all. Not to mention, we bounced off a lot of support level, like right here, this 72.18, 172.18 level. So this is also another sign that this could have rallied, and so I'd say that's probably one of the mistakes I made there. Right here, I mean, in reality, I should have measured all the way up here. What I did was I did my fib retracement measurements from here to here. That's why there's a stop loss only 10 pips above the high here. But in reality, this was not the how would you say this? This wasn't the lower low, lower close. This was. And this was the most recent high. So we had a lower low, lower close here from all the other, stuff that's behind it. And then we had a retracement up. We came down, consolidated sideways, and then we had another new lower low, lower close. This is just more sideways action. I should have measured from here to here. The reason I did it from here was because I was afraid I wouldn't get an opportunity if I had measured from here to here. Judging by what the market's doing now, if I did, honestly, this is the orange line. This represents a secondary entry in the event that this one doesn't get involved. And this was more, again, I don't believe that I actually, did I retake this trade? EURCAD? Yeah, I think I did. So this is actually, let's just go ahead and view it on the chart here. It's a great transition to the actual live trades. So I did decide to go ahead and take this trade a little higher, but in reality, with what I'm seeing, I don't think it's going to work out. I think I'm going to get stopped out. Just these candlesticks, particularly these two right here, are very big, bullish engulfing candlesticks. And they're not a bearish sign. I mean, they're definitely not what you want to see if you're trying to take a short, which is what we're trying to do here. So I think that this may have been a reversal and that we're going to get up and we're going to break above here and get stopped out. Do I really know for sure? No. I don't honestly know. I don't have a crystal ball, but that's kind of my thought process. The thing is, had I measured from here to here, I would have saved myself a loss, and I ended up losing in that one trade. It was only like about $92, so it wasn't a massive amount, but it was enough. I mean, still $92 is a lot of money when you only have a $3,000 account. So anyways, I mean, that's the hypothetical account that we're starting on, as you well know. But, so yeah, that's the EURCAD. I don't know what's really going to happen here. Basically, I just drew my fib retracement level from swing high to swing low. I got my 618 fib retracement. We had a new lower low, lower close. So I figured I would go ahead and remeasure since the first attempt got knocked out. If the second attempt gets knocked out, I'm actually switching my mindset. I made a video about this a little while ago, and basically what I was trying to say was that if you get stopped out, you need to be willing. I mean, I could look at here and I could say, oh, well, hey, I'm going to measure from here, or, and I was like, oh, well, that didn't work out. Okay, I'm going to measure from here, and I could literally go all the way up and measure from here. And I could take, this ends up rallying that much higher and goes all the way and ends up making new structure highs. I mean, that means I would have taken 1, 2, 3, 4, 5 losses, and these are much larger losses because remember, I mean, my stop loss would probably be somewhere down here. So that would be irrational. Don't do that. If you end up getting stopped out again, a second time, cut your losses and look for it to retrace and start heading higher. But that would be my opinion on how I would handle this. Ideally, I don't know if it was right for me to have taken the initial trade right here, but that's what I did. Alright, moving on to the New Zealand yen. Wow, I got multiple advertisements here. Alright, let's go ahead and close up this. Alright, so in this trade, we very clearly had a break of structure, a higher high, higher close here above this structure level. And so that's pretty significant if you ask me. So I went ahead and I drew my fib retracement level from this structure low, from the swing low to the swing high. Got a 618 fib retracement. I put my entry level on, and we eventually came down and we got filled. Now, when I found this today, we were only a few pips away from getting filled anyways, so I just went ahead and placed it. And yeah, I think this is a pretty clear-cut trend continuation pattern. However, I have said that before and still gotten stopped out. Sometimes the market it can look as clear-cut as you want it to look. It can look perfect and yet still not work out. So I don't really, again, I'm going to say this, and I know I say this all the time, I don't really know what's going to happen here. I hope that it's going to continue to go lower. However, if you look at the overall trend is, in fact, don't know why that's there, the overall trend, ladies and gentlemen, is in fact bearish. We are bearish. We're moving from the top left portion of the screen to the bottom right. That is a bearish sign. That's what we're doing. So we're making new lower low closes, you know, new lower low here, new lower low here, new lower low here, here. So the only thing is that this could still be reversing, because we were, well, actually, let's see here. If we were to zoom out to the daily, what's the daily showing us? Oh my gosh. The daily is still showing us long term, even all the way back to 2014, 6 years ago, we're still bearish. But because, I mean, this was back in 2020, in January, we took this big decline. So we could be retracing a little bit higher before we roll over again. That could be what's happening. So this just could be a retracement a little higher, and before we roll over. So, but in my analysis, we're still bearish, and we're just going to take a trade and see what happens. Hopefully, we'll get another rally and we'll make some money, because, well, to be quite frank, if you're looking at the actual my trade journal for a trading view, we need it. We definitely need it. It would be nice. But then again, we are trading on stuff that is not backtested. So it's to be expected that the performance is not going to go well, because just a trend continuation strategy doesn't work on every single currency pair and every single time frame. It just isn't going to work that way. It's going to work better on some than others, so it's best to do your backtesting to know which one performs better. Zoom out to the daily chart on here. All right, again, I am seeing that all the way back to 2017 here, so 3 years ago, we are still bearish. We are moving from the top left portion of the screen, which may sound silly and overly simplistic, but it still works, all the way down to the bottom right. So we've got a new lower low, lower close here, here, and here. Oh, actually, is it here? Yeah, okay, yeah, it is. It's here. And I wouldn't really, this wasn't really a new lower low, lower close. We just kind of came up here and consolidated sideways, and then finally got the new lower low, lower close here. Actually, really more just here. Well, if you consider this, let's do this real quick. Got our consolidation here and here. So this was kind of our consolidating area right here, I guess you could say. We were consolidating between these 2 points. We broke out, had a false breakout to the downside, had a false breakout to the upside, and then false breakout to the upside again, and then we had a break to the downside, and then retraced, and then finally came down again. So, anyways, the point is that we're definitely looking bearish from here to here. So my guess is that we're going to continue lower long term, but I don't know. I mean, this candlestick here is what kind of makes me wonder if that's actually, well, actually it's really just more big doji. So I don't know. I don't know what's going to happen. I mean, honestly, this is the daily chart, right? So we were clearly bullish because we're moving from the bottom left portion of the screen to the top right. So clearly we're bullish here, making new higher high, higher close. And yeah, and then we just started to consolidate. So we could be reversing. This did close below all of the structure levels. So that could be a big breakout sign, but I'm not entirely sure. What I'm seeing short term, though, is I'm seeing a big green candlestick, as you will see here in a minute. I'm seeing one massive big green candlestick right here, okay? And I think that this is a good opportunity. I mean, if you look at it here, we had an initial low, an initial high, an outside return, retracement, and then we had a new higher high, higher close, and now we're having another outside return. This looks to me, judging also by the previous structure here, new high, initial low, initial high, outside return, new higher high, new higher low, and then so this does look like this is in line with the current probably short-term trend, because the long-term appears to be bearish. Granted, that could have reversed, and we won't know until after it already reverses. So anyways, that is the 3 patterns that I got for you today. Go ahead and go close these tabs up. All right. So that is what I got for you today. Hope you guys enjoyed that. And I wanted to go ahead and kind of show you guys the Trading View Trade Analysis Journal, which I've titled it up here as. Kind of a mouthful. But, as you can see, we were at 3,100, I think, at this point. And then we kind of rolled over, and then we kind of just fell through the floor again, and now we're at 2,800. Unfortunately, this is just probably going to be what happens. We're going to have currency pairs that are consistently profitable and where this strategy works really, really well on, but we may be trading on more currency pairs that are unprofitable and don't really have a high performance. So that could be what's going on here, where we have more bad than we have good. And so ultimately, guys, if you're not doing this, you really need to. You need to be doing a trading journal, keeping track of your trades. That's how you're going to know whether or not your trading strategy is consistent or not. That's the only way you're going to ever be able to figure it out. If you don't have a trading journal, then how are you ever going to know what the performance record of your strategy is? Now, I'm going to be completely honest with you. Many of you probably don't even want to know the performance record, because it would mean that you may have to admit that you're not trading the right way. And if that's you, then in all honesty, you shouldn't be trading. You need to be keeping track of your trades. You need to be recording them in a trading journal so that you can know, okay, is my strategy more consistent on Fridays than it is on Wednesdays? Or is it consistent on Friday mornings than it is on, say, Thursday afternoon? If it's not consistent on Wednesdays whatsoever, then maybe we just don't trade on Wednesdays. Maybe we can see that here consistently, well, in the month of July, we had lots of different trades, and the majority were losers. So maybe we don't trade in July. In the month of August, again, majority were losers. In the month of September, it was a little half and half, really. I mean, it was mostly still losers, but it was better than the past couple months. October, mostly losers, and in April, it has so far been mostly losers. That is the sad, sad song of this particular trading strategy with all these different currency pairs. Again, most of these have not been back tested on, so I think I did back test it on the Aussie dollar and the Aussie CAD, and they are profitable, and I'm now currently testing it on the CAD yen. So we're just going to have to kind of see what's going to happen from there. But guys, you need a trading journal. Okay? You need to be tracking your trades. There's no whether you have back tested your trading strategy or not. And if you haven't back tested, I would really highly recommend that you stop trading right now, because you don't know what you're actually trading. You're trading blind. And you don't know what the performance is going to be. So you need to have a trading strategy. You need to back test that strategy. And you need to journal your trades. This is like trading basics 101. If you're not even doing this, then why are you risking your money? More than likely, you're going to lose. I know that may sound kind of depressing, kind of sad, but guys, that's the gist of this. That's the reality. You are flying blind. In what profession do you do that, where you fly blind? You start doing something that you haven't really put forth the effort to really know how to do. I mean, in what profession where you would do something like that, where you would get paid for that? In all honesty, not many. I can't think of one. In every single profession, you need to learn the skill. Okay? You need to learn what you're going to be doing. Practice it over and over, and then you go pro. Then you get paid for it, right? Whether it's a sport, you practice, like, say, basketball. You're constantly practicing over and over and over and over and over again, and eventually you get really, really good to the point where you can go pro and, get on a really, really good team. If you are, say you're in a profession like coding, you need to learn how to code first. You need to learn the most recent, most popular programming language And then you need to learn how to code. You don't just go code without knowing how to do it. At least you're not going to get paid to do that, is what I'm trying to say. You're not going to try to do it professionally without actually learning it first. Well, trading is no different. You need a trading plan. You need to backtest it over historical data so that you can determine whether or not it has a positive expectancy. And then you need to journal your trades. Even if you're not going to do the first two, where you have a strategy. Most people probably do have some form of a strategy, or at least most people who are taking this seriously do. There's a lot of people who are just willy-nilly risking their money in the market. Look, I've seen people do that. It doesn't end well. All right? It just doesn't. And in reality, if you really, really, really want to become a consistently profitable trader, and you want to make this into a career, a business for you, which you should treat trading like a business. I've said that before. Then you need to do your due diligence and do the work that is necessary to get there. The work that I'm doing. You know, I have a trading strategy. My trading strategy has rules. I obey those rules every time I come into the market. And then, on top of that, I go ahead and I take trades based off the rules. Right? But I back tested before I did that. Now, this is all hypothetical. This is all what the industry would call paper trading. This is all trading to see if your strategy is consistently profitable. So far, on this entire, with all of these different currency pairs, no, the strategy is not consistently profitable. But there are certain currency pairs here that may actually have had good performances, that more so than all the rest. But you wouldn't know that unless you journal your trades. So even if you're not going to have a trading strategy, even if you're not going to backtest your trading strategy, make sure that at least you're journaling. Okay? Make sure you're journaling your trades, keeping track, a performance record. Then and only then are you going to know whether or not this is something you should be doing. And if you're starting to see, like me, with this, crazy idea of trading without a trading strategy, I did this because I wanted to show you the folly of it. If this ends up making money, man, I'm going to be quite shocked, but I'm still going to say that you should not trade these strategies or any strategy without back testing it. So whether it makes money or loses money, I'm still going to say that you should never take a trade without back testing the strategy. And quite frankly, I will continue this until we get down. I'll just continue this to show you guys the errors of trading without a back tested strategy. All right. So you need to journal your trades. It doesn't have to be complicated. Like, there's a lot of people who make like massive Excel documents that basically have like indexes and all kinds of crazy stuff in order to backtest your trading strategy. You don't need that. I mean, look, I got the month, the day, the entry date, entry time. I got the currency pair, the chart interval, so 60 minutes. I got the system that I'm using, which is a 618 pullback. I've got my lot size, my entry, my stop loss, my target. I've got all the pips calculated out. I got my exit date, exit time, and then the pips earned and lost, profit, expense, return per trade. Again, this is kind of just restating how many pips I've already earned. I'm just translating the pips into dollars. Well, every one pip is $1. So it's kind of, do I really need all three of these? No, I don't. I probably could just go down to one or two, but whatever. I got three. And then when I'm done with this, I'm going to have the maximum drawdown in dollars, the maximum drawdown percentage, the number of wins, the number of losses, and we're going to actually see how profitable or unprofitable this strategy is. So, and guys, one of the most important reasons as to why you need to backtest and journal your trades is so that you can gain perspective. Gaining perspective, and I guess this is going to be the main message. Journal your trades to gain perspective. if you don't know, I mean, obviously you can see that you're losing because your accounts are getting smaller and smaller and smaller every single time. But if you don't journal the trade so that you can visually see it with your own eyes, then you're never going to have the perspective that's necessary in order to slap yourself in the head and say, hey, maybe I shouldn't be doing this. Or at least maybe I shouldn't be doing it in this way. You need that perspective. And you're only going to get it. I mean, like, when we're looking at charts, let's go back to TradingView. If we're looking at charts here, I mean, literally, we don't just always look at the hourly. Sometimes we zoom out to the daily or the 4 hour. Sometimes that's what we do in order to get a good perspective. But you're not going to have that if you're not going to back test and you're not going to journal your trades. I mean, we don't just need to gain perspective when it comes to our chart analysis. We also need to gain perspective with regards to the performance as well. So in order to become a consistently profitable trader, you need the perspective. You need to be tracking it. It's just like with personal finances. You want to control whether or not you're spending more money than what you're taking in, or vice versa, then you need to be tracking the money. You need to be writing down every single expense that you make. Then and only then are you going to know, okay, how much money, where's my money going? I'm losing money. My accounts are constantly going into the red, and I don't know what's going on. I'm clearly spending more, but I don't know how. So you need to calculate it. You need to keep track of it. You need to keep an expense account, an expense journal, if you will. Do some accounting work and keep track of that. This is something that my wife and I have done in the past where, we were spending a lot of money, and granted, we weren't spending more than what we were making, but a lot of our money was just, was going away, and we're like, whoa, what the heck? Where's it all going? So we decided to start tracking. We found out most of it's going to just going out to eat. My wife and I, we love to go out to eat all the time, particularly on the weekends. So it's one of those things where keeping track of it allowed us to know where it was going so that we knew how we could control it. Same thing with, like, if you're trying to lose weight, calorie counting or carb counting. I have a Fitbit. And what I do with the Fitbit is I will actually use it to calculate my calories. Now, the Fitbit's great because as you get more steps, it actually gives you more calories that you can consume throughout the day. So the more physically active you are, it rewards you by saying, hey, you can eat more. And it's really, really great. You don't start from, like, say, 1,200 calories or however many you're supposed to consume throughout a day based off your age, your height, your weight, and all that kind of stuff. And then you just subtract. You get to do all of that, but then you also get to earn it back. But I wouldn't know if I don't calculate. And you know what happens a lot? A lot of times, if I'm going through a rough day and I just want to eat comfort food that just I know is bad for me, I just won't track it. And then I'll get into this really bad habit of not tracking my calories up until, before you know it, I've gained weight instead of losing the weight. This actually is something I'm struggling with right now with, ever since my daughter was born. I had lost like 20 pounds, and I think I've gained most of that back. I think I'm only down 7 pounds now. So I've gained back like 13 since my daughter's been born because I don't have the time to do the workouts anymore. I mean, I'm struggling to have the time just to manage my business, let alone working out like I used to. Now, that doesn't excuse me for eating unhealthy. I don't have to eat unhealthy, but man, if I'm counting my calories and I'm not getting the physical activity, I can't eat much at all, or at least it really constricts how much I can actually eat. So it's just one of those things where when I calculate and when I count the calories, I know what I have to do. I know that I need to work out more. I need to get more physical activity to earn the amount of food that I want to eat. And it's the same thing with trading, okay? It's the same thing with trading. When you're trading, you need to earn the profits that you're going to make. It's possible to make money without really earning it. Do the work that is necessary to be worthy of the wins and the profits that you have made. If you're shortcutting the process, then yeah, you may have made money today, but you are not going to be making money all the time. You're eventually going to lose. You're going to get the winner's curse. You're going to overexpose yourself with regards to your position size, and it's going to get worse. You need to journal. You need to gain the perspective. Okay? You need to keep track of your stuff. You need to backtest. Come up with a strategy, backtest it, and journal your trades. Treat it like a business. And you will be worthy of whatever success comes down the road. But if you don't want to do the work now, you're never going to find that success. I'm sorry to say that, but it's just the truth. You're never going to find that success. But here's the positive part, is that you get to control that. This is all a choice that you get to make. Okay? You get to choose whether you are going to be successful or whether you're going to fail. If you want to continue to choose to trade blindly, then that's your prerogative. But just know that you chose that. It's your fault. In order for you to become really successful with this, you've got to point the finger at yourself. Everything. Okay? Your life is your fault. You take credit for your life. There's this concept called being the self-made man, right? You hear people say, oh yeah, he's a self-made man, or she's a self-made woman. And usually that's applied to people who are very successful, but who were not born with the success, right? People who were born into lower or middle class, and they were not born with a silver spoon in their mouth. So people that are in that boat, when they start to achieve a lot of money, a lot of success, people start to say that, hey, you're a self-made person. But I find that really ironic, because in reality, we're all self-made, aren't we? Whether we're failures or whether we have big successes, we are all self-made. I think it's funny how if you're a failure, you don't want to consider yourself to be self-made because you don't want to take the responsibility of admitting that where you are in life is your fault. But if you're successful, you want to take the responsibility for it. You want to say, oh yeah, I'm successful because of me. You want to take credit, but you don't want to take credit for the failures. This is part of human nature, and society and humanity as a whole is never really honestly going to get away from this. We always want to shift the blame when bad things happen. But in the end, and while yes, there are things that happen that we can't control, how we react is something we can control. Where you are in life today is on you, and no one else but you. You're not going to achieve the success if you constantly blame it on something else, something external that you have no control over. You've got to start pointing the finger at yourself. You've got to take responsibility. And you've got to own up to the fact that maybe you're not where you are because you didn't put forth the effort to get there. Maybe you're not where you are because you had a lot of unforeseen circumstances and uncontrollable circumstances that you responded very poorly to. Either way, it's on you. Take responsibility for your actions. Then and only then will you actually become successful. All right? So, guys, again, it's your choice. No one else can make this choice but you. You've got to make the decision to look up inside yourself and determine whether this is something you really want to do. And if it is, take it seriously. Do the necessary work. Gain the perspective. Earn the right to have the success that you want. Become the person that you need to become. Well, that being said, guys, we're over the time that I wanted to do today, so I hope you guys enjoyed the message. I know it was kind of hard towards the end. It was a bit tough love, but hey, I don't know about you, but I need the tough love. I need it all the time. I mean, yeah, the tough love can be depressing. It hurts because it's not designed to feel good, right? The point is like a slap in the face to get you in the right mindset. But in reality, if you don't have that right mindset, if you don't get slapped in the face every now and then, if you don't have the tough love, then, you're never really going to learn. It's just going to keep going. And I don't know about you guys, but it's very motivating to me, which is why I just did it for you. That being said, guys, if you like the video, hit the thumbs up button. And if you like what I'm doing here, subscribe to the channel. Also, I've got a couple affiliate links I'm going to be listing in the description of this video. If you love what I'm doing, you want to contribute, then go ahead and maybe subscribe. If the products are something that you're interested in, TradingView, go ahead and get a pro trading account. They're really not that much money. I think it's like if you pay annually, it's only like $20 a month. You want to learn the skill of trading, go to Tier 1 Trading. These guys are awesome. They will not turn you down a wrong path. They are going to teach you everything you need to know when it comes to trading. All right? They're really, really, really great. And if you guys will do that for me, see you guys in the next episode. Remember, know the risks, plan accordingly. Have a great day.